Welcome back, everybody, for another deep dive. Today, we're going to be looking at something that's, hypothetical, but potentially explosive.
Oh, yeah.
A trade war.
Yeah.
Between the U.S. and China.
Right.
Under the second Trump administration.
Okay.
We've got some really interesting reporting from the Wall Street Journal.
Interesting.
And it looks like China might be playing a little bit of a bluff.
Oh, really?
Rattling sabers. But their dependence on exports to the West could leave them with more bark than bite.
Oh, wow. Okay.
So that's what we're going to be looking at today. What's going on with China's?
Yeah, how would they retaliate?
Exactly.
Well, I think the important thing to understand is the complex web of economic dependencies here.
Okay.
China's initial posturing has been pretty attention-grabbing.
Yep.
They've hinted at all kinds of retaliatory measures, everything from restricting those crucial minerals, things like gallium and germanium, which are essential for, all sorts of technology, to making life difficult for American companies that are operating on Chinese soil.
Right.
There's even been talk of currency manipulation or selling off U.S. Treasury bonds.
Wait, hold on.
Yeah.
Currency manipulation.
It's been floated.
And selling off Treasury bonds. That sounds pretty apocalyptic.
It's definitely a possibility.
Like, is that really something that we should be worried about?
Well, I think...
The article even cites specific examples.
Yes.
Like the antitrust investigation into NVIDIA, the chip giant.
Yeah.
And the potential blacklisting of PVH.
Yes.
The company behind Calvin Klein and Tommy Hilfiger.
Right.
I mean, are we really on the brink of some kind of economic meltdown here?
I don't think we should hit the panic button just yet.
Okay.
While these actions sound very dramatic, there's a strong undercurrent of hesitation coming from Beijing. China's economy is very deeply intertwined with Western markets.
Okay.
Especially when it comes to exports. Disrupting those relationships.
Yeah.
Could trigger a severe economic backlash for them.
So they're really in kind of a tough spot.
They are.
It's almost like trying to punch someone.
Yeah.
While you're holding their shopping bag.
Exactly.
You're probably going to hurt yourself in the process.
Yeah, you're going to drop all their stuff.
Exactly. But let's get specific here.
Sure.
The article highlights China's control over critical minerals.
Right.
These essential ingredients for high-tech industries. If they restrict exports, wouldn't that just cripple U.S. manufacturing?
Well, it's not quite as simple as that.
Okay.
While China is a major player in the production of these critical minerals, they don't hold all the cards.
Okay.
For example, the U.S. already sources gallium from Canada.
Oh, interesting.
And germanium from Germany.
Okay.
So diversifying supply chains. Like, this weakens China's grip and makes their threats less potent.
So it's like a game of economic whack-a-mole.
That's a great way to put it.
China tries to block one supply route.
Yeah.
And another one pops up.
Exactly.
But this raises an interesting question for me.
Yeah.
Could we see third countries stepping in as middlemen?
It's possible.
Like, could they purchase these minerals from China?
Yeah.
And then sell them on to the U.S.?
Right.
Essentially circumventing any restrictions.
That's definitely a possibility.
Wow.
And it really highlights the complexity of these global trade networks.
Okay.
China's attempts to restrict exports could inadvertently create lucrative opportunities for other players to step in.
Wow.
And there's another layer to this.
Okay.
If China artificially restricts the supply of these things, basic economics tells us that prices are going to go up.
Of course.
And that makes it even more enticing.
Right.
For others to enter the market and try to profit from the situation.
So China's actions could actually backfire.
Potentially.
Strengthening these alternative supply chains.
Yeah.
And ultimately diminishing their own influence.
It's possible.
Wow, that's fascinating. But what about American companies?
Yeah.
That are already operating in China?
Sure.
The article paints a picture of growing unease.
Yes.
With some companies already scaling back their operations.
Right. Absolutely. We're seeing a shift in the dynamics between U.S. and Chinese businesses. China's economic slowdown, coupled with their focus on nurturing domestic brands, has made the country a less attractive prospect for some American companies.
The article uses General Motors as a prime example.
A good example, yeah.
Right. They're reportedly shutting down plants and streamlining their offerings in China.
That's right.
Is this a sign of things to come for other U.S. companies?
Well, It's certainly a data point worth watching. And if China really decides to tighten the screws on U.S. companies operating within their borders, it might actually accelerate the decoupling process.
Right.
Imagine American companies pulling out of China altogether.
Yeah.
This could further weaken China's economic leverage in the long run.
That's a fascinating paradox.
It is.
China trying to punish the U.S.,
right,
but potentially ending up hurting themselves even more.
Yeah.
It's a high-stakes gamble.
For sure.
But let's play devil's advocate for a moment.
Okay.
What about the short-term fallout?
Yeah.
Even if this decoupling ultimately benefits the U.S.
Right.
Couldn't China cause enough immediate economic pain to make a second Trump administration reconsider its aggressive tariff strategy?
That's the million-dollar question, isn't it?
Yeah.
Could China inflict enough short-term pain to force a policy shift?
Right.
Certainly possible, but remember their most effective weapon might be restraint, especially regarding consumer goods.
Okay, that's an interesting point.
Yeah.
The article did mention China's dominance in low-tech manufacturing.
Right.
What if they disrupt the supply of everyday items?
Yeah.
Think charging cables, screws,
right,
all those little things that we take for granted.
Yeah, those little things.
Could they weaponize inconvenience? You know, it would certainly be annoying.
Oh, for sure.
Maybe even enough to create public pressure on the U.S. government.
It's true. Disrupting the flow of those everyday items could create headaches for consumers and businesses.
Right.
But would it be a decisive blow? Probably not.
Okay.
The U.S. could adapt, finding alternative sources or even boosting domestic production.
Right.
Remember, annoyance doesn't necessarily translate into economic catastrophe.
Okay, so disrupting the supply of cheap gadgets might not be the silver bullet.
Right.
But what about those other options we touched on earlier?
Yeah.
Currency manipulation, for example. Could China devalue the yuan to make its exports cheaper and gain a competitive edge?
It's a tactic they've used in the past.
Right.
But it's a risky move.
Okay.
While a weaker yuan could make Chinese goods more attractive on the global market.
Yeah.
It also risks triggering capital flight, investors pulling their money out of China due to lack of confidence.
Interesting.
That's something that Beijing is really keen to avoid.
Okay.
They might tolerate a limited devaluation, a slight nudge to boost exports,
right,
but a dramatic plunge in the yuan's value?
Yeah.
Highly unlikely.
And then there's the nuclear option, dumping U.S. treasuries.
Right.
China holds a massive amount of U.S. debt.
They do.
What would happen if they decided to just sell it off en masse?
Yeah.
Could they crash the U.S. bond market and send shockwaves through the global financial system?
It would undoubtedly be a disruptive move.
Okay.
But let's not forget, the Federal Reserve has tools to counter such actions. They could step in to stabilize the market, just like they did during the pandemic in 2020.
Right.
Plus, China would be left with a mountain of U.S. dollars.
Oh, yeah.
Where would they invest that money?
Yeah, good point.
It's a scenario with potentially more downsides than upsides for them.
So if China's most potent weapon is actually restraint,
it seems that way.
What does that mean for their strategy in a potential trade war?
Yeah.
They seem caught between a rock and a hard place.
They do.
Needing to project strength to their domestic audience.
Right.
While simultaneously avoiding these self-inflicted economic wounds. How do they navigate that?
It's a very delicate balancing act.
Okay.
We're likely to see a combination of symbolic retaliation, targeting specific companies or sectors to make a point.
Right.
While simultaneously pursuing a negotiated settlement behind the scenes, their priority will be finding a way to save face, appearing strong to their citizens, while minimizing the damage to their export-dependent economy.
This raises an interesting question for you, our listener. How might other countries react to this economic standoff?
Yeah, that's a good question.
If China hesitates to use its full economic might, could that embolden other nations to challenge U.S. dominance?
It's possible.
They're seeing a potential shift in the global balance of power unfolding right before our eyes.
That's a crucial point.
Yeah.
Just as some countries are wary of over-reliance on the U.S. dollar and its financial system, others might become increasingly concerned about their dependence on China for manufactured goods.
Okay.
China's actions in a potential trade war could actually accelerate the trend of diversification away from China.
Interesting.
Countries might start hedging their bets, seeking out alternative sources and partners to reduce their vulnerability.
It's like watching a giant game of Jenga.
Oh, yeah.
Pulling one piece out can have unforeseen consequences for the entire structure. But let's zoom out for a moment and consider the bigger picture. We started this deep dive by asking, what tools does China really have in its trade war toolkit?
Right.
And after unpacking this Wall Street Journal reporting with you, it seems like their most powerful weapon might be something unexpected restraint.
Yeah, precisely.
Their economic reliance on the West, particularly for exports, puts a hard limit on how aggressively they can retaliate.
Absolutely.
It's a real tightrope walk.
Yeah.
Between projecting strength and avoiding self-destruction.
You could say that.
This reminds me of a historical parallel for the Cold War.
Oh, okay.
Back then it was an arms race.
Right.
The threat of mutually assured destruction kept both sides in check.
Yeah.
Today it's economics. Could this fear of mutually assured economic damage be the defining characteristic of this new era of great power competition?
It's a compelling comparison.
Yeah.
And it raises the question, what does this mean for the future of global trade?
Right.
If open conflict is too risky,
will we see a gradual decoupling?
Okay.
The world splitting into distinct economic blocks. One centered around the U.S. and the other around China.
And how would that impact you, our listener?
That's a good question.
Where do your own business interests, investments, even your daily life fit into this shifting global landscape?
It's worth thinking about.
These are the kinds of questions we need to be asking ourselves.
For sure.
As this economic chess match unfolds.
Absolutely.
We've covered a lot of ground today.
We have.
But I think the key takeaway is this China's trade war toolkit is more complex than it appears.
It really is.
They have options, but each one comes with its own set of risks and limitations.
Yeah.
Their most strategic play might be to choose their battles carefully.
Right.
Focusing on targeted actions rather than all-out economic warfare.
And for those watching this global power play unfold, the message is clear: stay informed. Stay curious.
All right. And be prepared for the unexpected.
Because the future of the global economy is being written right now.
It is.
And it's a story that's far from over.
Well said.
That wraps up our deep dive for today. Thanks for joining us as we explored this critical issue.
It was a pleasure.
We'll be back soon with another deep dive into the forces shaping our world.
Looking forward to it.
Until then, keep exploring.